Hello, hello. Jamie here. It is Friday, March 19th, and this is your stimulus Q&A and update. So I'm going to be talking mostly specifically related to things impacting business owners and self-employed people with regards to everything that's going on in the stimulus world. I'm talking about PPP loans, EIDL loans, unemployment, tax return stuff, the employee retention tax credit. We're going to cover all of that today, and including some changes and things that are currently in the works to change. So I'm Jamie Trull. For those who don't know me, I am a CPA, financial literacy coach, and profit strategist. My bread and butter is doing online courses. I teach online courses to help business owners understand the basics of their finances and also to learn to think like a CFO and really make strategic decisions about their finances within their business. But right now, I am your stimulus gal. So I'm here to bring you all the information I can about all this stimulus fun stuff. So we are coming up on a year almost anniversary of when the CARES Act was originally passed. And that feels crazy to me that it has been a year of this. If you had told me that a year ago, I never would have believed you. I wouldn't even have understood half of the words that come out of my mouth today. So anyway, it's been a little bit of a ride. Hi guys. Hi Autumn. Hi Stacy. Hi Karen. Nice to see you guys. I'm currently live on my YouTube channel. If you're watching me over there, like and subscribe. My YouTube channel is just Jamie Trull. So go search for me over there. Also, I'm live in my Facebook group, Financial Literacy for Women Business Owners. Come join us over there. If you are not a member, we would love to see you. We're having lots and lots of conversations all about this type of thing over there. And then I'm also live on my business page. So wherever you are watching me from, tell me hello. Tell me where you're tuning in from right now. I do a live Q&A every Friday at 1:30 Central Time, all about these stimulus efforts. Hi, guys. Okay. So I'm going to get started. I'm going to jump in. I know a lot of you guys are still joining right now, but I don't want to make people wait too long. So today we're going to talk about, I actually have an agenda, you guys. I actually have, I wrote some things down that we're going to talk about. So we're going to talk about PPP, specifically the extension that is likely to happen. We're going to talk about tax returns, what's going on with the timing of tax returns and things to think about there. We are going to talk about the unemployment, the change where they made unemployment, a portion of unemployment tax-free and what to do there, especially if you've already filed. Then we're going to talk about a couple of important things to know with the EIDL loans. So for those of you guys who took out EIDL loans, I have some news for you. And the employee retention tax credit and some really great changes that were made in the most recent stimulus. And then if we have any time, although that's a lot to cover, I will also take a couple of questions here at the end. So let's jump into it because there are a few things to talk about. First of all, PPP extension. What am I talking about? The House this week passed an extension. Now, it still has to go to the Senate. It still has to be signed into law, but it was an overwhelming vote yes on extending PPP. What does that mean? Well, currently PPP is now set to run out March 31st. A lot of banks had stopped taking applications because of the fact that at the original way that it's kind of written, right? It was March 31st, but you kind of had to have it processed. It seemed like the SBA wasn't going to process any loans past that point. So a lot of banks stopped taking applications earlier. Now what they're doing is they're likely going to be extending it all the way to May 31st, and that would be the application deadline. You would have to get your application in by May 31st, and then the SBA would have an extra month to process those applications. So banks still may cut it off a little bit before that May 31st, but that gives more time. So what do we think about that? Well, I think that's a positive thing. Currently, as it stands, we have about $100 billion left in funding. So will it last the whole 2 months? I don't know. It probably depends on a couple of things, but it's not going to go away overnight. And it really could last all the way. Now, what does this mean for those of you who, if you've been following along, right, they changed the rules about, a couple of weeks ago, almost a month ago now, where they said, you're going to be able to get your loan specifically for self-employed people filing that Schedule C. Instead of using line 31, which was net profit, you would be able to use line 7, which was gross income. okay, to calculate your loan amount. So you take that line, divide by 12 times 2.5, assuming you don't have any employees, that's the amount of your loan. So obviously using line 7, which is gross income, is going to give you a higher amount than line 31. Some people have not been happy about that, however, because within the law, there was no ability to go back and actually, for those of you who already got loans or maybe had already applied at the time that this changed, to go back and change that number. So that is still the case. However, there are a couple of caveats. So depending on, if you got your loan last year, then these caveats won't really work for you. But if you got your loan maybe a week or two or had started the process before they made this change, you have a few avenues. So right now, what you can do is check with your lender. Some lenders are automatically going back through and seeing who they could do something for, right? I've heard that. But it's a good idea to check with your lender and say, hey, even if you've already been funded, again, these are for people who probably got the loan over the last month to 45 days, to go back to their lender and say, hey, have you filed my form 1502? Yes, that's right. I had to check. 1502. That's what your bank has to file after you get funded. Then they file this form 1502 with the SBA, and then it's done deal. Once that's been done, there's nothing that you can do, at least right now. We'll talk about whether that could change in the future. But it's possible that if the bank says, oh, actually, we haven't filed that yet, there are rules written for the banks where they can basically, you can repay the loan, they can refile it, and then go through, like, reapply and give you the new amount if they have not filed that 1502. You wouldn't know that. That's not something that you would know. They would know that. So you can check back with your bank. Again, specifically if you got your loan probably in the last 30 to 45 days. Seems like banks, I believe what I heard is that they file those essentially once a month. They file these 1502s. So, if you got your loan, 4 weeks ago, it's possible that they haven't filed that 1502 yet. So I would check on that with your bank first to see if it's a possibility, if using gross income would be helpful. Yes, 100%. So for some banks, they're automatically doing this. They're reaching out to people and saying, hey, you can make this change, right? Previously, I would have said it's risky to do this because of the filing date, right? So giving back that money, you might end up with nothing, and it was kind of that bird in the hand. But if it looks like it's going to happen pretty soon here, that the PPP deadline gets extended 2 months, then I feel a little bit better about saying, yeah, that might be worth the risk of going ahead, especially with your bank's okay, and paying back that money. But if that 1502 has already been filed, you can't do it that way. You would have to wait for maybe something more official to come out, which will it? I don't know. But one of the positives of them extending this deadline 2 months for people to apply is that it also allows them a little bit more time to figure out if and how they could make this retroactive and figure out what that system would be. Are they doing it? I don't know. Feel free to call your Congress people if this is something important to you. I still will say, though, if you've already gotten forgiven for your loan, right, you're likely not going to be able to get it increased even if they come up with some retroactive way. So this would only likely be if they did change anything for people who still have their loan open. So I've continued to say, I know we all want to get forgiven. I get it. It's amazing when you get that forgiveness, but you don't want to put yourself in a situation where you could have gotten more. So, if your loan was already over the total max, which is $20,833 for a self-employed person with no employees, then you're probably fine to apply for forgiveness. It's probably not going to make a big difference. But if using gross income would help you and you got less than that max, you might want to just wait it out. That is the one thing that we have seen in this process is that continually the people who are on it and the people who have gone first are the ones who have kind of gotten a little bit screwed at the end of the day. I won't say it that way because, it's assistance, which is obviously appreciated, but you could potentially get more just by waiting it out and waiting for the rules to get more and more lax, which is where they're going. The rules are not going in the direction of getting worse. They're only getting easier. So we'll keep that in mind when we decide what we're going to do. Okay. So that was PPP extension. I'm just going to look and see. Yes, you can get, if you have two different businesses, you can get PPP for both of those businesses because the business is what applies. Now, if you are, I believe if you're running both of them under the same like social security number, right, then technically you would apply just that one time and you combine them. Some banks were just allowing you to combine those two different Schedule Cs that were both under your SSN. But for you, if you're an S Corp, you have one identification number and then you should have something else for your self-employed. You can get two PPP loans for that. Okay, let's see. So yeah, I think I answered your question that I just saw. Yep. Oh, yeah. And so this would also be a thing too with this extension. Those who got their first draw in 2021, which it was going to be real tight to try to get two draws, right? Because you have to use up the full amount the way you're supposed to before you can get that second draw. Not before you apply, but before you actually receive the money on that, you need to have used all the money correctly. And my personal opinion on that for my self-employed people is that you can't really use that correctly in less than 2.5 months. If you take the whole thing as payment to yourself, you can't just say, well, I paid myself the first week that I got it, so now I can apply again. That's not in the spirit of the program. I can see that coming back to bite people in the end when banks see that you got two PPP loans within 3 weeks of each other, right? But now with this extension, it will give you a little bit more time to actually use those funds in the way that you're supposed to and apply for your second draw. So that could be a really good thing as well. So you can take it all as one lump sum, but remember it's 2.5 months of pay. If the whole amount is coming to you, remember, if you are paying yourself the whole amount and that's what you're claiming as forgiveness, to me, you have to pay yourself over 2.5 months. It's when you work out it's like roughly 10.8 weeks, right? But ultimately it doesn't matter how you disperse that, but that's what it's considered to be payment over. Right. To me, that's the spirit of the rule is that is your payment to yourself. That is owner compensation for 2.5 months. Okay. So you could do it at so if I'm being, again, this guidance does not exist out there in this level of specificity, but if I'm going back to the intention of the program, you're getting 2.5 months worth of pay. Now, if you use it only, when you go to apply for forgiveness, if you're saying, well, 8 weeks of that was owner pay and the rest of it was rent or whatever else, then maybe you could do it a little bit earlier at say like 8 weeks, right? So it's not a tight deadline. I think if you make it the 8 weeks, then you're probably okay. But again, I just would not, I personally wouldn't advise anybody to get two distributions, actually get money within 8 weeks. Now, again, it doesn't mean you have to wait the full 8 weeks to apply because it is taking a couple of weeks, but then you kind of get in a weird zone because you have to be able to certify that you will have used the money before you get the next round, and you don't know when that next round is coming. So it's kind of hard to certify if you haven't used it all when you're applying. That makes sense. It's kind of a weird rule. I just don't want anybody to get in trouble later down the line where people come back and they're going to be doing audits on this. And I feel like a very easy audit check is, oh, this person got two PPP loans within 2 weeks of each other, right? Like that's not gonna fly probably. Okay. Let's see. I don't think that the rule changes that. I think it's still 2020 versus 2019 from what I have seen. Okay, so that was PPP. Tax returns, y'all have probably seen this at this point. It has been official. The tax deadline has been moved from April 15th to now May 17th. I think that's because April 15th falls on a weekend. So it's May 17th is when everything is due. May 15th falls on a weekend. So May 17th is the date. However, important point, because that's federal, that's your IRS, that's your federal tax return. Not every state will follow suit. Most probably will, but not every state will follow suit with that. So you want to be monitoring what's going on with your state and if they are also moving their deadline or keeping the same. Last year, there were 4 or 5 states that did not move their deadline, even though federal moved to July 15th. And it just created a whole frenzy for my poor tax preparers out there who were trying to figure out how to do that. So make sure you're paying attention to what your state tax return due date is as well, so you don't end up with fines and penalties and things like that because you thought it was extended too. Okay. So that's tax returns. Again, I wouldn't be in like a crazy hurry to file just because there are some of these things that need to get incorporated into, depending on what kind of software you're using. Some of the changes from the last stimulus that passed last week may or may not be included in your software, or may not be included in the software that your CPA is using even. Okay. Important update on unemployment. So for those of you who already filed your tax return, which did happen to a lot of people, they filed their tax return and they had unemployment, and then they passed this new bill, which essentially makes it such that the first $10,200 of unemployment is tax free. Okay. So people our assumption was, well, like anything else, you'd have to file an amendment. They have changed that. They've said, hey, don't file amendments, you guys. Instead, they said that they're going to automatically be sending out those refunds. Okay. They're going to be automatically resending refunds to those that filed, that had unemployment and could have had that first amount that would have been tax free. So no timeline has been given as to how long that's going to take or anything like that, but just that's something to know. You do not have to file that for a refund. I'm imagining it could take a hot minute though, because the IRS has a lot of things going on right now. So something tells me that's not going to be their first priority to refund people, but you should see that at some point in time. Okay. And I'm wondering too, that may hold up your full refund. So if you're expecting a refund, haven't gotten it yet, that may be holding up that while they're trying to figure out so that they can calculate it in before they give you your refund. I think that taxes are just going to take longer than normal this year. They did last year as well. Okay. Let's see. So likely, states, it's going to vary what states do on unemployment as far as whether they are exempting any of that or not. I would not expect that they would on the whole, but we will see. Okay, EIDL loan. Who here got an EIDL loan? So for those who got a loan, I'm not talking about the advance, I'm talking about the loan. You want the one you have to pay back. The stimulus bill extended your time frame to make those first payments. Okay. So remember, payment was deferred for a year. So if you got your loan in 2020, your payment was deferred for the first year. Now you are accruing interest, so don't forget about that. But your payments, you don't have to pay anything for the first year. Well, now they've added another year because what they realized was, oh crap, it's almost April and some people got their EIDL loans and they're not in really any better shape to start repaying these than they were a year ago. So they have extended that out. And now you have another year. If you got your EIDL in 2021, you get 18 months. So if you got an EIDL in like January, these are the loan I'm talking about, you have 18 months to make that first payment. So FYI, for anybody that was stressing about that payment date coming up soon, that has been extended. So hopefully that is a positive news for you guys. But again, it doesn't change the amount you have to pay overall. It's just you don't have to start payment till later. So you're going to have bigger payments likely starting later down the line. And you still are accruing interest in that time period. Let's see. Okay. So then the last update that I had for you was on the employee retention tax credit. Lots of you guys have downloaded my calculator. If you haven't, I want you to download it. I attached it above. It's a very, very nominal fee, and it has essentially helped people get thousands of dollars back, thousands and thousands, in some cases, hundreds of thousands of dollars back. So it's probably worth it. So check that eRTC calculator out. I have not yet updated it for the new changes. The new changes did extend eRTC into Q3 and Q4 of 2021. So that means instead of previously your total you could get was $19,000 between 2020 and 2021, now you can get up to $33,000 per employee. Okay? $33,000 per employee that you can get from this tax credit. This is not a deduction. This is a credit, i.e. full amount of money back. Okay. So If you don't know what I'm talking about, I have a whole video on employee retention tax credit. I'm going to do a new one probably next week, hopefully. I don't like committing to things like that, but maybe next week, where I talk about the extension into Q3 and Q4. Rules are generally the same in Q3 and Q4 for qualification. But there are two new things. And by the way, if you get my eRTC calculator, or if you've already gotten it, or if you get it today, I will send you, once I do the updates and push those through the calculator, I'm waiting on just a couple of clarifying guidance to be issued, and then I'm going to reissue the calculator. You will get that. So be checking your inbox for the updated amount or the updated calculator. So if you've bought it previously, you're going to get the updated one as soon as I update it, probably next week, more than likely. So the two new things too on the employee retention tax credit. So again, if you don't know what I'm talking about, go find my YouTube video on it, okay? Or buy the calculator, and then the calculator will send you the video that comes with it. But the two things are, if you are a severely financially distressed employer, meaning that beginning in the third quarter of 2021, employers that have experienced at least a 90% decline in gross receipts compared to the same quarter in 2019, okay? So like Q3 2021 versus Q3 2019, if it's down 90%, which is obviously very severely financially distressed, then you don't have a limit on the wages you can take for the employee retention tax credit. You can take essentially all wages paid. So right now, if you go watch the video, I talk about how you can get $7,000 per employee, basically, for regular employers. You're not limited to that if you are a severely financially distressed employer. We're waiting for a little bit more implementation guidance on how all that's going to play out. It's one of the things that I'm waiting to see how that comes down the line. But that's just something people who have been very well affected, you want to know about this. Also, this one's interesting. If you have a new business, so remember all the stuff we've been talking about, PPP, EIDL, all of that, my new businesses that were not in business by February of 2020 are kind of saying, well, wait, what about me? Like, I've struggled too, but just because I started in March or April or May, like now I don't get anything, right? So you could be eligible for the employee retention tax credit as a recovery startup business. Okay, so basically you started up a business during the recovery. You do have to have W-2 employees. So if you started a business but don't have any employees, or it's just you, then this wouldn't qualify for you. But if you started a business and you hired employees after February of 2020, okay, after February 15th, 2020, you could be eligible for up to $50,000 of the employee retention tax credit per calendar quarter. That's what I'm waiting on a lot more guidance on. When does that start? Is that retroactive? Does that start in Q3? It's kind of hard to tell in the guidance. And how that's going to roll out is going to be interesting. So, I would definitely watch for more details on that. So that's something I'm watching for you guys if that applies to anyone with a new business. So that's going to be a big change for the eRTC. I do not give implementation guidance because I do think that this is something that is important to work with your payroll company and your CPA on. I don't think that people should necessarily be doing their own 9041Xs. It's really good idea to have other, we're talking about a lot of money potentially here, you guys. So you want to have some professional eyes on this. So I don't do tutorials for a very specific reason. Also, me, myself, have never done a 941X. So I would not be a very good person to teach you how to do one specifically. That said, I know there are some other ones on YouTube if you really wanted to look them up. Hector Garcia is a friend of mine, and he has some tutorials out there I know about it. Let's see. Okay. So I'm just looking back. Correct. The eRTC specifically doesn't apply to sole proprietors. This is only for those who have W-2 employees. You could be a sole proprietor, I guess, technically, but you do have to have W-2 employees. It can't just be you. Let's see. So I did talk about this a little bit earlier. So watch closer to the beginning where I talked about PPP and the gross income change and what I'm expecting to happen there. So I've seen this question. I'm just going to address this. And I know that I'm going to take away any like political undertones from this, but I do want to address this point because there was also a comment in the Facebook group about this and like, where's all this money coming from? And how am I like all the stimulus is our taxes going to go up tremendously and things like that. Something important to know, just economic theory in general, right? So economic theory in general would say the purpose, the reason behind doing these types of things. And you will see stimulus type things, bailout type things, whether that be corporation bailouts or actual, bailouts, monies to the people, which is essentially still a bailout, you guys. They're economic bailouts. The purpose of this is to keep the economy from going off a ledge, right? So that's why like they keep extending the unemployment and the extra unemployment, because what could happen if people lose that, aren't consuming, right? If people aren't getting that money, they aren't consuming, they aren't spending their money at businesses collapse, they have to fire employees, then you have more people on unemployment. It's this like terrible, essentially this just cycle that doesn't end. So the theory behind it from an economic perspective is the more money that you put in the hands of people or in the hands of business owners, specifically with the desire to keep jobs, right? With when you're trying to incent them to keep jobs, which is what the PPP does, or giving money directly to people. Most of the time, especially if they are properly targeted, and that's the key, they have to be properly targeted. You don't want to give stimulus checks. That's why they don't give stimulus checks to millionaires, right? They're giving them to people under a certain income level, that those people are more likely to go out and spend that money because they need to. They're using it for their groceries and their rent and the things that they need, right? And they're helping businesses, therefore, by doing it. And every single time money changes hands in an economy, taxes are generated, both at the local level from a sales tax perspective and from an income tax perspective that will be local and also at a federal level. So that's your economy, right? If there's no money changing hands, you have no tax revenues, you have no economy. And now you have a situation where everybody's going to need essentially federal assistance anyway, because there will be no jobs, right? So that is really, again, I take all the political blah, blah, blah out of it. The economic theory behind putting money into the economy is this. And they haven't really seen a whole heck of a lot of inflation. Yes, of course, sometimes this gets caught up in cost of goods and things like that, and prices in general over time go up and maybe taxes go up. There's a wide variety of things that happen. But in general, it is effective economic policy that we have used pretty much every time we have gotten into any kind of economic hole, right? And we're really just trying to prevent that cliff from happening. If you let all these programs expire and you stop giving people money and businesses and things that aren't back to where they need to be, that is when we have a bigger problem than if we just give people money. So just that's my 2 cents on the whole thing. If anybody is curious or wants to know what I think, right? But it does. It gets spent. It gets put back out there, and money changing hands, every time it changes hands, it's generating tax revenues. That is our economy, and it's generating jobs. That's what they're trying to keep money in circulation so that continues to happen. Okay, so hopefully that's helpful. Okay, let me just look. I got about 2 minutes left, which I'm probably going to go over because I'm going to start reading some of these questions. Yes, if you've used your money appropriately with the first, but again, I talked about that a little bit earlier too. There's a little bit of wiggle room. There's a little bit of gray area there. It depends on your own risk tolerance, what you want to do. But in general, if you've used all the money appropriately, then you can apply for another draw, assuming that was your first draw, right? You can't, once you've had 2 draws, that's all you get. Let's see. I'm just looking. So I have continued to say no. Personally, my read, and you will get different reads, but I've talked to multiple other CPAs. A conservative CPA like myself is going to tell you probably not. It is, if you go back to the original IRS code that it quotes, and this is why it gets difficult. It doesn't say it. It says specifically, it calls out like you can't use it for sons and daughters and all that, but it doesn't quote for owners or spouses. But if you go back to the original IRS code that's like quoted. It's like this round robin game of following the guidance kind of trail. It takes you back to what I interpret to mean, no, you can't. And when you, again, think about the spirit of it, you can't retain yourself, right? Like, and that's why they're saying, that's why they're not allowing to do family members, because like, what the heck is the point in retaining? Obviously, you already have an incentive to retain employees who are family members. They're trying to get you to retain other employees. So I would feel like that's the same rationale with spouses and personal. So I think sometimes we try to get too like nitty gritty and find the loopholes and things like that. And really we got to go back. I always, whenever I can't find the actual answer, my answer is always, what is the spirit of the thing that we're doing? And yeah, maybe there's a loophole there, but just because there's not really clear, obvious guidance to you doesn't mean that they can't come back and say that wasn't within the spirit of the guidance and, you know, not allow it later. So I'm more conservative in general. You could probably find an accountant that would tell you differently if you wanted to shop around for one. I'm not giving financial advice, caveat 100 times, right? Don't take my advice as personal financial advice. I am a CPA, but I'm not your CPA. Okay, let's see. Okay, so that's all I can see right now. I probably missed some of your questions, but it gets a little bit, there's just a lot going on in the chat roll. Sometimes it's hard to keep up. Okay, guys, it's been my 30 minutes. Y'all are awesome. Hopefully this was helpful. I will be back next week for the next installment of Stimulus Update and Q&A. So hopefully things can like calm down and stop moving a little bit. Eventually, I'm probably going to go to a every other week schedule, but things keep changing. So I keep saying, oh, I'll just keep doing it every week for now. So we will see. I'll see you guys later. Have a marvelous, marvelous weekend. Bye, guys.